Good afternoon, everyone. Thank you for joining us. We will just give it a couple of minutes for everyone to make their way into the meeting, and then we will get started. Good afternoon, everybody. It looks like most people have made their way into the meeting now, so we'll start off. I will cover off some introductions first and then let you guys know exactly what we're going to be running through today and in which order, and then we'll get started with the session. So first of all, I'm Kevin Berry, Finance Director at Bloom. Also on the webinar with me today, we have Ben Dara, our Product Owner for Pro-vide 2, Lee Dixon, our in-house legal counsel, Paul Mander, our procurement director, Alex Wright, our senior marketing exec, and Jude Taylor, our financial controller. Just as a reminder for those who aren't as familiar with these sessions, there should be a Q&A box at the bottom of the screen. If you click on that at any point, you can post messages as we go through the slides right into that box, and please do. As we run through the process, I'll start with a bit around our downstream processes. And we will then move into a demonstration of Ben going through our self-bill portal and how we register and what that looks like from your guys' point of view as suppliers of ours. We will then pause for an initial Q&A around the downstream process and self-billing and the self-bill portal and the finance portal within our system, and we'll do some Q&A around that part of the topic today. Then we'll move into a section on IR35, which Lee will deliver before Paul discusses some wider opportunities and how you can collaborate with us better at Bloom. So without further ado, we'll get into the content. So just as an overview of our overall downstream process. So this is based on the fact that you guys are already accredited suppliers of ours. You guys have been awarded a contract and you've got a live project and you're delivering work and working towards milestones. And once you reach one of those milestones, that's when this process really kicks in. So once you've reached a milestone through our Pro-vide 2 platform, and again, this process is based on the Pro-vide 2 platform process and our NIPRO frameworks, you log into that system and you submit what we call an SDP or a service delivery plan. And the service delivery plan, which there are separate webinars about specifically on our YouTube channel, if you'd like to drill into that step of this process more. The service delivery plan is really where you record an update on the project that you're working on, which milestone you've delivered, the value of that milestone, and any updates on the project overall, really. And you submit that into our system. That is then sent directly across to the relevant person at the buying authority. They will then run through the approval of that service delivery plan. So they'll be checking that the update is accurate, that the value is correct. And once they have approved that step, that is when the invoicing and the payment terms kick in. So at that point, once they've approved that service delivery plan, 3 invoices are actually raised by Bloom. We raise an invoice to the buying authority for that fee from Bloom. We raise your invoice to us. So we raise a self-billed invoice on your behalf to Bloom, and that's what we're going to drill into today through this session. And then we also raise a management fee, which is our fee from Bloom to yourselves as the suppliers. And then from there, usually what happens is the buyer will pay Bloom within 14 days, and we will pay that on to yourselves as the suppliers within 30. So just drilling into self-billing a bit more specifically. So self-billing is a method where we, as I say, raise your invoice to us, so your sales invoice as a supplier to Bloom. and we raise that on your behalf, and that is signed up to as part of the work order agreement, the initial award of the contracts. This is the valid document from a VAT perspective, and certainly the document that HMRC would expect to see if there are any HMRC inquiries around VAT. And the invoice number on the self-bill invoice is something you should record in your system, and it is quite key to flowing through that reference to all of the other parts of our process. That number is referenced on your remittance advices, it is referenced on the management fees, and as well as the project references. So that self-bill invoice number is quite core and critical to the process. It's much easier also if you include that reference on any inquiries you send into our accounts inbox, which is where we can deal with day-to-day questions about payment and expected payment dates, and or any queries around the values or issues with that invoice. Again, the STP approval as highlighted in the previous slide, that once that approval takes place, that will generate the self-bill invoice, and that will record the invoice at that date of approval, and that will become the tax point for the service as well. And as Ben will demonstrate through the next section, the self-billed invoice is downloadable from the invoice portal in Pro-vide 2. Now that's a slight difference from the management fee invoice or the remittance. So those are emailed to your nominated contact directly from our finance system. So those aren't stored within the Pro-vide 2 portal for the management fee or the remittance, but they are emailed directly to your contact. So just a quick overview of what the self-billing agreement includes. And in this regard, the customer in relation to this agreement is Bloom, and the supplier, the self-biller, is you guys as the supplier. So we are agreeing that we will make those documents available to you, that we will include all the required fields for it to be a valid full VAT invoice. And the main one for yourselves as the supplier is that you are agreeing to use that as the valid document and not to raise a sales invoice to us separately to that. Now, in practice, what that means is that most people will recognize, including HMRC from my experience, that most people cannot stop their systems generating an invoice at the end of an internal process, but as long as that is retained for internal purposes only and our document is recognized as a valid VAT invoice, in my experience, you should not run into any problems in that regard. But this is a fairly standard format for these agreements, which is approved and recommended by HMRC. And this slide gives you guys an overview of what the self-bill invoice that you can download from our portal looks like. So it has, as I mentioned a couple of slides back, all of the fields you would expect to see on a valid full VAT invoice. So it has your self-bill invoice number up in the top right-hand corner, as well as the invoice date and the tax point of the invoice. It has your sub details, your name, company registration number, VAT registration number, address on the top left, and Bloom's details on the right-hand side. It has the project details in this header section in the middle, and it then includes all the details of the service where it says the description of the milestone services here, which in this example is payment schedule 2. That will be a description of the milestone that you have delivered. The value of that milestone, which was part of your STP submission and part of the buyer's review when they approved this submission, is also what feeds directly into these invoices. So this value of the service or milestone net of VAT is what's included here. And as I say, it feeds directly from that service delivery plan that was submitted by you guys as our suppliers in the first instance. And if that VAT is applicable, that will be displayed in the bottom section here, as well as in this VAT summary in the middle of the description boxes. And finally, before I hand over to Ben to show you guys through accessing the portal and what the portal looks like and how you can download these documents easily, just a few key points to recap on. It is really kind of key, as I mentioned before, to this whole process that the self-bill invoice reference number is a real core field that you guys are recording and using either inquiries with HMRC or questions raised with Bloom. It will dramatically speed up our ability to respond accurately and efficiently to the queries that you guys send in. And as I say, it is the kind of single reference that is consistent throughout our documents. So it will be quoted on the payment remittance that you guys receive. It will also be quoted on the management fee invoices as well. Again, the invoice document, it should be something you guys have stored, because if HMRC were to inspect you or audit you for any reason, or just as a regular checkup, it is the document they would expect you to produce, along with a copy of the self-billing agreement. And any documents you raise internally should not really be distributed outside of your organization. If your system has to generate one at the end of a process, they should be retained for your internal records only, and our document should be the one that's shared wider across groups. So we will move on into Ben's section, where we will talk you through the portal and how you download those documents and access them. And then we will pause for a Q&A around this topic specifically before we move into the section on IR35 with Lee.
Okay, thank you, Kevin. So I'm just going to show you the very quickly through the finance portal. And the first thing to say is this does sit separately to your Pro-vide to sourcing login. So this is, although contained within the same system, is a different login because of the nature of the financial documentation stored within. You will be invited, an invite will go out to you on the award of the first project with Bloom, for you to then set up the portal and the login details. If you've run multiple projects and you haven't yet got this set up and you don't currently have access to the portal, please do drop us an email and we'll share the contact details at the end to be able to do so. And we will be able to set that up for you. The invite will go to the account holder or the account owner. So if there's some of you sitting in finance who are thinking they haven't seen this yet, it may be that that person's received the invite and either set up access or hasn't then shared it on with you. So please do get in touch. It is fairly straightforward in that it captures all financial documents, so the sales orders and those invoices. So if we look on the left-hand side, we have the basic navigation. The area you're going to look in most is this second one down, the document with the clock. And in here, we can access sales orders and your invoices as well. So if we first up take a look at our sales orders, if I click into there, within here, for any project that you've got through Bloom, as soon as a work order is signed, this document will be accessible through the finance portal. The sales order document. And in here, if this is currently filtered on 90 days, but you would have every project within here that you've ever had through Bloom. There's another couple of bits to look at here. So we have the sales order number and then we have the PO number. So this PO number is the reference that's used within our system. We then have the date it's created, which obviously the start of the project, and the total amount. You can also then use a range of filters to drill down into those if you need to, covering things like the specific order number or invoice number, if you have a specific invoice number to search on, which I'll show you in a moment, the creation date, etc. Now, the easiest way often is actually just to use the search. So you can search on the name of the project, for example. So if I have a project called Business Change. Now we may have three, but you'll narrow down your search there. You can add in more specifics on the name of the project as well to drill down and find individual projects. And then you can click in using the sales order number on the left-hand side to access that further information within there as well. So in here, you've got your header level information for that sales order, and then you're going to have your payment schedule that sits below that. Now, this will correspond to the payment schedule as agreed within the work order, so it should be a mirror within that. And then over time, if there are any change requests, change control notices added onto that, they will also be added onto the sales order. So in here, you've got an overview of that. But really critically, you can also then access your invoices that are against that project as the project progresses. So there's a number of things we can look at here, but of most interest to you and most use is going to be that invoices tab. And in here, we can then see all of the invoices that have been erased against that project over time. We can click into that invoice and we can see it rendered within the system. So you can see the PO reference, the payment schedule line, and the description, so the milestone or payment schedule name against that, as well as obviously the value and the VAT information and anything else down the bottom there. But as Kevin mentioned, you can then download that for your records. So if we just use that download arrow at the top there against the e-invoice, the electronic invoice tag, you'll then be able to pull that invoice out. And again, as Kevin said, save that for your records as and when needed. And this relates back to that slide that Kevin had shared earlier. So you can first off search on your sales orders and go through it that way if you're looking at a project level. As well, on the same navigation, so if we go into orders on the left-hand side and our sales invoices, we can then also search on our specific invoices as well. So the reference that will be used here is the Bloom reference. So it's the Bloom ID, which will be on all of the invoices generated as part of the self-billing. So if you were to search using that will narrow that down. And then you can click in again to access that invoice as and when. Again, you can download it. And you can also see the reference back to the PO if you need to go through to the PO as well for the individual project. You can also see a history here if you need to in terms of when it was generated and any of the other the metadata that sits below that. Again, you can download and save that for your records as well. Within the sales invoice element, you can also drill down further. So again, if you have, if it's for a specific milestone or payment schedule name, so for example, this is for a discovery phase that's been billed, you can search on that as well. So as long as the name's set up within the work order and this corresponds to that, you can then drill down and find that specific invoice for that piece of work as well in there and locate it that way. And on top of that, there's a range of other filters that you can use if needed in regard to PO numbers. So if you have a PO number and want to find all of the invoices, and again, setting dates and parameters in accordance with that as well. So that's the basics of the system. It should be fairly straightforward. You can also see a status against those invoices. So we have when it's ready to be payable, and if it's in process, it's still processing in our system. It doesn't yet state when it has been paid within here in terms of that final step of an update of the status, which is something we would be potentially looking at to incorporate in the future. But at the moment, it will have a status of payable when that invoice is ready to be paid. And as part of the payment terms, the date will correspond to that. The last bit to show you is managing access to it. So as I mentioned before, the invite to the portal will go out to the account holder. Now, in all likelihood, there's going to be members of finance teams and others who will be more likely to be the ones that are going to access this on a day-to-day basis. So that person, that admin person, can then, through the administer manage users, send out an invite to any other colleagues within the business who can then have access to this portal. So it's just a case of that admin putting in the details and sending that user request, and that will then give you access. Again, if you have problems and you're not sure who that admin is, or if you have one set up, please do drop us an email at the end on the Pro-vide to inbox, and I'll be able to pick that up and come back to you on who the person is and the admin within your business and get you added onto the portal. So I'm going to pause there and go back and see if we have any questions before we move on to the next section.
Thanks very much, Ben. That was really good. As Ben mentioned, feel free to reach out to us by email if you need any further information. The final slide we put up at the end will have multiple email addresses which you can use to reach out to us on. If anybody does have any questions now, feel free to pop them in the Q&A box. Ben, we do have a question in from Donna. And Donna wants to know if there are a maximum number of users that can be added to the invoice access area.
No, you can keep going to your heart's content.
So as many users as are required. Ben, can we have project numbers visible on the invoice portal? Now, there is a project reference on the invoice document that's created. Ben, is that something you can search by in the field as well? Or
Yeah. So when we set up the projects, that we'll add in the project reference. So you should be able to search on your project references in there. If you can't for any reason, do let me know, because that should be set up. And if it's not, I can make sure that's added in, so you can search through on your project IDs.
Okay. This is a fairly common question we've got in next from India. Why is the finance portal separate from the main portal? What does service delivery SDP stand for? So it's separate from the finance portal as from the regular portal, as Ben mentioned, mostly for security reasons. So we recognise that financial documents are often retained or only accessible in organisations by specific members of staff, and we have tried to maintain that segregation and control and security as best as possible. We do recognise that it is sometimes an extra step for you guys to get a second registration done if it does happen to be the same person in your organisation that does the SDP submissions and the invoices, but it is for that reason that they are separate. SDP stands for a service delivery plan, so it is essentially a submission that summarises the current status of delivery against a specific milestone. Is there anything else to add into that, Ben?
No, that's right, Kevin.
There are notifications. We do have a question around notifications on the portal as well. So there are notifications when service delivery plans are either available for submission and approved, I think is correct, Ben.
Yeah, and I should have said, yeah, so within about half an hour or so of a service delivery plan being approved, the invoice will be available within the portal. So it's fairly quick, but yeah, just give it about half an hour. So from getting that approval notification, the invoice will be accessible.
Yeah, and if you, as we've kind of said a few times, if you do feel like you are missing notifications or they're not being received, feel free to get in touch with us, and we'll check the kind of users that are set up and be able to tell you where they are going to. And it is that approval which will coincide with the generation of the invoice. We do have another question about STPs, projects being managed offline and STPs being emailed with copies of their own invoices. Now that is it's something, so your own invoices as per the self-billing agreement should be retained internally only, and the self-bill document is the only one that should be shared around through multiple parties externally specifically, if it is being done so. We do have some clients that require us to download backup, normally project reports, status updates, and share them via email rather than in the system, but it is very few and far between. So we do have a newer, another section for Q&A at the end of the process, at the end of this webinar. We will move into Lee's section now on IR35, but we will continue to answer any questions relating to this section that come in at the end as well. So Lee, over to you.
Just checking to make sure I've got control. Yeah. Hi, everyone. I'm Lee Dixon, in-house counsel at Bloom. I've been here now for 2.5 years, and my principal responsibilities include ensuring Bloom operates within the law, whilst it manages the operation of the NIPRO 2 and NIPRO 3 frameworks for professional and consultancy services. I've been asked to deliver a short presentation covering the recent extension of the IR35 rules to the private sector, with an emphasis upon how, if at all, it affects the engagements of our clients and suppliers undertaking projects through the NIPRO frameworks. This is the running order for today, and given that the rule changes came into effect almost 2 months ago, I'm assuming that everyone on the webinar has at least some understanding of their content. I will briefly recap why we have IR35, remind everyone of some key terminology and relate this to the three-handed neutral vendor model operated under NIPRO. There will be a quick whiz through the pre and post April 2021 obligations from a private sector supplier's perspective before I then discuss the NIPRO framework's approach to the IR35 conundrum. All being well, there will be some time at the end for any questions. And as previously said, if you can submit these using the question tab below, Alex will be able to marshal them for us. IR35 has been around in various guises since 1999. And it is in essence an anti-avoidance legislation which is intended to ensure a worker's income tax and national insurance contributions are broadly the same as those of an employee. Before IR35 was introduced, individuals could avoid being taxed as an employee on payments for services by providing those services through an intermediary, and usually by receiving dividends rather than a salary from the intermediary. The intermediary is usually their own personal service company, or PSC for short, and the individual would not be liable for national insurance contributions, and the pay-as-you-earn process was not applicable. In response to widespread non-compliance, the rules were beefed up in 2017 to apply to all contracts where the provision of services via an intermediary was for a public authority. Broadly speaking, the effect of the off-payroll IR35 regime is to shift the responsibility for assessing whether IR35 applies, and if it does apply, to shift the obligation to make deductions at source in respect of income tax and national insurance contributions. Any obligation is shifted to the party that is closest in the contractual chain to the intermediary. The scope of IR35 was extended further to cover medium and large businesses in the private sector from April 2021. This was initially intended to be from 2020, but due to COVID, its implementation was delayed for a year. It is this extension that has been the catalyst for today's presentation. Before I progress, it might be useful to reacquaint ourselves with some of the relevant terminology. On this slide, I have listed various terms which have specific meaning in the IR35 world. To the right hand of the slide, in blue, I have identified which party in our NIPRO world that the term could relate to if IR35 were to apply. Firstly, end user, client, end client, and customer is the party for whose ultimate benefit the services are being provided. This will always be the contracting authority under the NIPRO frameworks. Next, a deemed employer will be the party receiving the benefit of the services, but in circumstances where it is determined those services are being delivered inside IR35 via an intermediary. This will trigger the obligation to deduct tax and national insurance contributions before payment is made to the intermediary. Under NIPRO, if the situation were to arise, a deemed employer could only ever be the contracting authority. As stated earlier, where IR35 does apply, the obligations to make deductions at source in respect of income tax and national insurance contribution falls to the party that is closest in the contractual chain to the intermediary. This entity is known as the fee payer, and in the NIPRO world, if, and I stress again, if IR35 was to apply, this could potentially be Bloom if they engage the supplier through the supplier's intermediary to deliver the services, or it could potentially be the supplier if they utilised a subconsultant through the subconsultant's intermediary to deliver the services. A supplier or their subconsultant could potentially fill the roles of consultant, worker, or deemed employee. In the NIPRO world, this is always the person or persons engaged to actually deliver the services. I've made several references already to an intermediary. In the NIPRO world, we are primarily concerned with a consultant that delivers their services through their own personal services company. Finally, the end client, who is always the contracting authority in the NIPRO world, has the obligation, where necessary, to carry out an assessment to decide if services are being delivered inside or outside of IR35. Their decision is known as a status determination statement, or an SDS for short, and they can use the HMRC Check Employment Status for Tax, or CESS tool, to help them come to their decision. To generate an inside IR35 or outside IR35 outcome, the CESS tool uses a series of questions geared around the supervision and control measures that have grown up in the employment law field to establish whether an individual is an employee, a worker, or an independent contractor. Prior to the extension of the IR35 regime to the private sector this April, things were fairly straightforward. Where services were being delivered to a private sector client by a private sector supplier that was utilising their own intermediary, the responsibility for assessing and paying tax and national insurance was self-determining and fell squarely on the intermediary. On the 6th of April 2021, where the private sector client engages a supplier through the supplier's intermediary and IR35 may apply, then as the end client, they should produce a status determination statement. If the delivery of the services is deemed to be inside IR35, then the relevant fee payer is responsible for deducting the tax and national insurance contributions at source. Now, if I may, I want to take you to the place I've already referred to as NIPRO world to explain how NIPRO and Bloom approach IR35. As you know, the NIPRO 2 framework and its successor NIPRO 3 framework are OJU and PCR compliant frameworks owned by NIPRO that appoint Bloom as a sole neutral vendor delivery partner. Their aim is to enable an authority client to procure best value specialist professional and consultancy services through Bloom in an efficient and compliant way. Bloom uses its extensive supply chain to match accredited suppliers to a client authority's requirements. The framework has been specifically set up to only enable the engagement of a supplier on an outside IR35 basis. It does this in two main ways, the first of which is based on the terms of the framework standard contracts. In both the client call-off terms and the supplier terms, it is clear that appointment of the supplier by Bloom is on an independent contractor basis. If an appointment at some point falls inside IR35, then it becomes non-compliant under the framework and may be terminated. The frameworks do not permit the supply of contingent labour. Therefore, applying the supervision and control questions used in the CESS tool against the framework contracts generates an outside IR35 outcome. Bloom has been audited to this effect for NIPRO 2, and NIPRO have recently received independent legal advice to this effect for NIPRO 3. Clearly, the contractual foundation for the delivery of services under the framework is only part of the picture. It's probably more important to look beyond the contract to the actual day-to-day delivery of the services themselves. This is why Bloom, under the NIPRO frameworks, are leaders in scoping projects to deliver clearly defined outcomes on a milestone basis. The fact that the client authority is ultimately receiving and only paying for defined work outcomes rather than simply paying for a given individual's time that puts our engagements outside IR35. At Bloom, we have a large and experienced team that works closely with client authorities to develop high-quality outcome-based specifications for projects, which draws on our library of over 4,000 specifications. On the instigation of any project under the NIPRO frameworks, a client authority must certify that they require the configuration of an outside IR35 solution. To ensure ongoing delivery outside IR35, we require our client authorities and suppliers to adhere to the supervision and control structure set out in the framework contracts and to follow the delivery plan and milestone payment structure detailed in the project work orders. By doing this, we can keep projects outside IR35 and in scope for NIPRO frameworks. Finally, I understand that Alex is going to share the slides after this webinar, so I just wanted to add in this hopefully helpful information, not so much for the link to the CESS tool, which I suspect you're all already aware of, but more for this link to the Cabinet Office Consultancy Playbook. It was fresh out last week and contains, amongst other things, this handy table highlighting the typical indicators for a consultancy versus contingent labour agreement. That's the end for me. I am happy, if I can, to answer any questions. And I see there aren't any, so I breathe a short sigh of relief.
Yeah, so we'll move into Paul's section on how to collaborate with Bloom. And if you do have questions, please do pop them in the box, and we will have time for some additional Q&A at the end of the session. And as Lee mentioned, we will share the slides and the recording of the webinar with all of the attendees afterwards.
Thank you. Thanks very much, Lee. Very enlightening, as always. And I think just to add to that, I will talk a little bit today about some procurement updates, which includes reference to the consultancy playbook and sort of our views on that. But I just wanted to start by talking through a couple of other kind of routes to market that Bloom offer. So obviously Lee talked quite heavily there about NIPRO 3 and NIPRO 2. And we also have routes to market through Crown Commercial Services through the management consulting frameworks. So under MCF1, we are a named supplier on Lot 6, which is for education. And we are also named on MCF2 under Lot 1, which is our business consultancy, and Lot 2, which is around procurement and supply chain consultancy. So the reason for raising that really is that we are able to support you in engaging with organisations that wish to use those frameworks. So if that is the case, then please do feel free to get in touch. There is a section on our website that allows you to have a look at that. So we'll just make sure that that's added to the slides after this session, and you'll just be able to see a bit more about that and how you engage with us. And then in terms of wider partnership opportunities, we as Bloom, as you know, operate a dynamic marketplace. So, you know, we are able to offer additional flexibility to suppliers that we work with. And whilst the categories that we deliver under the NIPRO 3 framework are fixed, there are opportunities to consider the addition of new subcategories within those top level categories. So most recently, we've added a subcategory around support for private finance initiative contracts and the handback of assets into the public sector. So that's something that we pride ourselves on, being able to be flexible, and we work with NIPO to kind of look for those new opportunities. What that does is it really make sure that the public sector can benefit from innovation. So actually, if there are services that you're providing where you're not quite sure where they fit, or you're not quite sure how they could be delivered into the public sector, then again, please do get in touch and we can talk to you about how we may be able to support you with that across the public sector and across particularly those organisations that we're already working with. And finally, just wanted to talk about a couple of kind of procurement updates that I've been asked about a number of times over the last sort of 6 to 9 months. One in particular, which is around transforming public procurement, and a green paper that was out at the end of last year out for consultation. For us, that's something that we're very, very interested in. I think it certainly alludes to a lot of the processes that Bloom adhere to. The way in which we operate is certainly seen as something that will deliver a lot of what is expected out of that green paper, and we're now kind of waiting with interest to see the outcomes of that over the next few months, and as we enter the autumn. A couple of other kind of things to mention: the procurement policy notes that come out on quite a regular basis. One that I wanted to highlight was around social value. For us, social value is a massive part of what we do at Bloom, and we are here to support you as well in terms of how you build social value into all of the projects that you deliver. For us, that's obviously something that we are very keen to kind of promote and to support you with, but actually the procurement policy note from last year, I think, was 0620, for anyone who's interested in that, and I will add the link to this slide as well. Actually, it mandates the inclusion of social value in central government contracts, and is heavily encouraged for the wider public sector too. So actually we are working really closely with suppliers to support you, and we want to do more because we know how important it is to the public sector as we move forward, and that gets implemented. And the other point that Lee raised quite rightly was around the consultancy playbook, which was published only last week. And that's the reference procurement policy note 0321. And that talks a lot about kind of the definition of consultancy and how to get the most value from consultants as well. Now, a lot of the things that are mentioned in the consultancy playbook are things that Bloom do already. So actually, we certainly encourage the use of mini competitions through our framework. We have a significant proportion of our community is small to medium-sized enterprises. And we also have a lot of voluntary and charitable organisations within our marketplace too. So just all really important points to kind of to be aware of, and really to say, if there are things that you need support on from any of those perspectives, then we're happy to kind of help you with that. So please do get in touch. I think I'm handing back to Kev now to wrap up, and obviously to have a look at any final questions as well. Thanks very much.
Thank you very much, Paul. So we do have a slide with some contact details on as well. Should anybody want to reach out to us, feel free to come into these inboxes here. So the accounts one is naturally for finance or invoice related query. The provide to can help you with access to the self-bill and finance portal that we discussed at the start, and the operational inbox there, you can fire any supplier registration or type questions into. But if you're not sure where to send something, please send it in to one of these addresses, and we will pick it up and make sure it gets to the right place. There was one question that came in throughout that second half around the first bit of the webinar today around sending in copies of your own invoices. Now, as part of the self-bill agreement, as I mentioned, you have agreed not to do that, and doing so could be a breach of that agreement and could cause VAT liability if it was to be picked up on by HMRC. So yeah, I would certainly recommend that doesn't take place and you don't circulate copies of your own invoices, and you stick to using the self-bill generated ones. And we do have a question from John Lee about IR35, and the question is that just to confirm that IR35 is NIPRO 3 is currently outside of IR35 and potentially in the future. Now, I think that is around the outcomes-based approach, Lee, but I'll let you elaborate.
It is both NIPRO 2 and NIPRO 3 only permit us to do projects which are set up and delivered outside IR35. And that is now, and that will consider into the future, continue into the future.
Thank you very much, everybody, for joining us today. As I said, we will make a copy of the slides and the recording available to everybody who attended. And thank you again to all the panelists for helping us out. Speak to you all next time. Thank you.
Thank you.